This episode is brought to you by Suzy, a cutting-edge market research software platform that empowers some of the biggest companies in the world, like Citibank and Procter & Gamble. To find out more about how Suzy can help you stay competitive, go to tearsheet.co/Suzy. Welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. In late January, Upbound Group completed its acquisition of Brigit, a leading financial health technology company. This deal brings together Upbound's established brands like Rent-A-Center with Brigit's digital platform that offers earned wage access, credit building products, and financial wellness tools. The combined company now serves approximately 4 million active customers, including Brigit's impressive base of over 1 million paying subscribers. I'm thrilled to welcome Zuben Mathews, the co-founder of Brigit, to our podcast today. Zuben continues to lead the Brigit team as they now operate as a business segment within Upbound Group, alongside his co-founder, Hamel Kothari. In our conversation today, we'll explore the strategic vision behind the acquisition, how Brigit's technology will enhance Upbound's existing services, and what this means for millions of Americans who have been traditionally underserved by mainstream financial institutions. We'll also discuss how Brigit's proprietary cash flow underwriting technology and machine learning capabilities might change the landscape for accessible financial products. Zuben, welcome to the show.
Thank you so much for having me, and what a wonderful intro. I don't think anybody in our team could have done a better job.
We're done here, right? I guess that's all. Exactly. So let's talk about strategically. Why now? Why Upbound? Let's talk a little bit about the story behind the exit.
Sure. I mean, there are two very important, very distinct questions. Maybe I start with take them one at a time. I mean, in terms of why now, look, there's no perfect time or when to decide to sell, quote unquote, what you've built over a period of time. The two core focuses that both Hamel, who is my co-founder, as you mentioned, and I have always had, is to truly make the biggest impact we possibly can, leveraging, indeed, the cash flow technology, so I appreciate that mention as well, to this segment of the population that, unfortunately, is the widest segment of the population in the United States. And for us, we wanted to get to a point where we'd build an enduring business while doing that. So one of the things we were able to do, according to one of our investors, was save $1 billion for this core user base from overdraft fees and other predatory fees. And
that's a great KPI to track. Yeah,
it is one of the ones that matters most to every single person at this company. Mm-hmm. We truly built this, as I mentioned, to have a social impact, but also try to show that while doing so, you can build an enduring business. So we've actually been profitable for the last couple of years, just only using cash flow. And for those who don't know what we do, we're a financial health app that give money to people between paychecks to help manage the volatility between paychecks, build their credit scores through savings, and a whole bunch of financial literacy tools, all as a package. So we've come to a point where we thought we had reached a certain amount of scale. I'd mentioned, so on revenue, we're going to be 200 million plus this year. We're only a team of 100 people, built real technology. So we fortunately were able to check those boxes. And the question came up, and this was initially through looking at partnerships, not so much at an acquisition. How do we have the largest impact at the fastest way possible? And again, as I mentioned, there are a couple of strategic partners we're talking to, again, not so much from an acquisition standpoint. And those conversations quickly changed from, hey, can we take our core technology and have a wider impact through partnerships to actually being an acquisition. So that's kind of the why now. Again, there's no specific answer and say, hey, this is all planned. We had a 2-year vision, a year vision to try to sell our company. It was definitely more organic. The second part of your question, Zach, is why Upbound? So there are a number of reasons. First of all, for us, as I mentioned, it really starts from having the largest social impact and our team and people. And one of the things that really took us back was a presentation, the CEO, Mitch, who's been at the company for 40 years in many different forms, starting from a store manager all the way up to the CEO. And the way he pitched the ability to say, hey, he understands this customer segment, because a lot of people just don't. And I think the fact that both he and I have lived through financial pain through different points of our lives, and hopefully at this point really understand what it takes to have a meaningful impact, that really was the was the trigger for us to even start these conversations. Besides that, obviously, when you start to look at the total impact the company can have, also not just from a social impact perspective, but also the financial impact and how you integrate the synergies, because there's a massive demographic overlap between our two customer bases, but not an actual overlap between the customers. So you have this massive signal saying, hey, you can truly expand to that user base that I started talking about at the beginning of the conversation and have a better financial outcome. So that really, I mean, that pitch that he came to New York to give us really, really took us by surprise and was very impactful on why we chose them. And it's not always look, a lot of financial people will say, look, always take the company with the largest, willing to sign the largest check. That's not necessarily what we did in this case. We took the one that we thought was right from a user impactful, but also had the values very much in line with us.
Yeah, and I have to imagine being led by social values, like that's a pretty tight filter on for the types of companies you can partner with or exit to.
It is, but it's always complicated.
Yeah.
I think when you talk about unfortunately, this customer segment, there's a lot more you need to go have a more of a microscope to really understand what people are actually doing. Is the product flexible? Is there transparency? Whether it's in terms of managing teams, but more, I would say, as importantly, if not more importantly, to what you're offering the end customer.
You know, we haven't had Upbound on the podcast. Maybe it's worthwhile just saying a little bit about who that customer segment is of theirs and what they do.
Sure. Look, the reality is, despite us being the wealthiest country in the world, and I'm talking about both our overlapping customer base, unfortunately, 3/4 of our population live paycheck to paycheck. Mm-hmm. I mean, as an immigrant coming here for the American dream, I would say over 20 years ago, and I'm starting to date myself, it really is mind-boggling how we are just continuing to have people living in the state of financial stress, right? Given the fact that such a large segment of our population earn $50,000 or below, that's the most amount of money. And what I would also say is that it's very, very expensive in this country to not be rich. It's not so much as expensive to be poor. It's expensive.
So it's like the middle class has expanded, but it requires more and more energy and work to stay at the middle class level, right?
That's exactly right.
Yeah.
I mean, the unfortunate point is most of the middle class is also living paycheck to paycheck, mm-hmm. as is most of our country, as you would expect. So that is the end customer that we're trying to solve for. And the way we look at this is saying, hey, what do we do to help reduce people's financial stress? Whether, as I pointed out, from our perspective, is giving people money between paychecks, even automatically, not using FICO or credit scores, because I think that's archaic. It's probably great for $1 million house in Manhattan, not so good when you're living in such a state of financial stress. Get money, be able to build your credit score, because unfortunately, again, the average credit score in America is not that strong, and it's still important, and a bunch of savings. That is the core product that we're providing, and it's, again, to the same customer base who, at the end of the day, just needs to feel more financially secure, and give them a path, including through financial literacy, to get there.
The financial industry depends on data, but not all data is created equal. Choosing partners who can separate fleeting trends from groundbreaking innovations is more crucial than ever. If you want to unearth what forces are shaping the industry right now, download our guide at tearsheet.co/Suzy. And the fact is that it's the same demographic, but there wasn't a lot of overlap, you said before, of the two companies?
There's about I think we've talked about this publicly, so I'm happy to state that there's about a 10% mm-hmm. customer overlap. And for us, because we're still a relatively new company, right? We will have, as you pointed out, Zach, we've got 1 million plus paying subscribers because we're a subscription app. But there's so much when you're talking about 3/4 of our population living paycheck to paycheck. And also just being a purely digital native company, as you pointed out, Upbound has a bunch of assets, including Acima, which is a digital lease-to-own platform, but also the more older Renter Center, which mm-hmm. is digital and obviously physical. So just given that about 10% overlap is a very strong signal for us. I know it might not sound that strong, that there's a massive opportunity to cross-sell, but at the same time, the fact that 90% of the customers hadn't been cross-sold yet mm-hmm. gave us both the strong signal as well as a good market opportunity as well.
Yeah, it makes a lot of sense. I'm curious about, Zuben, about the combined entity. I guess what it enables you to do that neither party could do on their own.
Well, I mean, And I think it's a lot of question about being able to quote unquote buying time. I mean, I would always argue time is more important than money.
Most valuable
So
asset. Yeah.
yeah, I mean, it's easy said than done, but that's the honest truth, right? So to answer your question, Zach, there's a number of things. Again, part of this comes back to how fast, as I talked about earlier, as we started this podcast, how fast Brigit can have a larger impact to a larger segment of this population, and that is we're literally starting to do some tests this month. It's only been a month since the close, month 5 weeks since close, and we're going to start to see some of those results coming in this week, next week, so on and so forth. So that is one aspect. The other aspect I would talk about from an Upbound perspective is, look, as I pointed out, they still have an underwriting platform as well, but we only for underwriting use cash flow. So that someone's income, volatility of income, historical spending, and borrowing pattern, all of it changes in real time. So being able to put our core underwriting platform into a SEMA and Rent-A-Center, we over a period of time, this will take a little bit more time. We expect their approval rates to go up as they would, and also hopefully over a period of time, their loss rates to go down as well. As part of our core cash flow stack, not only did we do the risk flow management underwriting, we also have a payments engine that predicts when's the best time of being able to manage payments in a cost-effective manner. So all of those things, hopefully over a period of time, not hopefully, we fundamentally truly believe over a period of time will start to make a multiplier impact on both our companies.
I want to switch perspective to technology and integration or lack thereof. It sounds like you guys are continuing to operate as an independent entity. How do you think about, I guess, long term about the technology integration opportunities there?
Yeah. So as you said, one of the perks of having this deal done and a management team, whether it's the CFO and CEO, understanding the importance of because we're only a 100 people team, as I pointed out.
You have like McKinsey-like numbers, revenue per employee.
We try very hard. This is quote unquote the AI boom. We've been a machine learning data company, so being able to get Visa type revenue per FTE hopefully gives a sense that the core tech team and our whole team has built core technology that's differentiated. A point that you brought up. And just to come back to the question, so the good news for us for the short term is we get to operate, as you pointed out, as an independent business entity with limited integration from a core technology perspective, because again, we are serving the same massive customer base, but they are differentiated products that together add value even more so as you look at an individual's financial journey. So in the short term, we kind of get the best of both worlds as Brigit, as an independent unit, goes in and says, hey, please send us your users and we'll send you some of our users, and start to get that as a whole. So there's not much deep integration from a tech perspective that's required, because those things slow people down quite a bit. But the good news is over a period of time, as I pointed out, we will start to spend more time integrating our payments engine within a SEMA and Rent-A-Center, integrating our underwriting. So hopefully that increases, again, approval rates. And the beautiful, anytime you do approval rates, you're having more financial inclusion. That is literally the reason why I pointed out we got into this business in the first place. Being able to give a moment of happiness to an individual says, oh, I can get access to this product and I'm paying less than I would from an expensive loan or whatever it is. That kind of drives us. So we do expect over, let's call it 12 months, 24 months, and hopefully in the cross-sell point, a lot sooner than that, to start to have a pretty big impact.
And what about, so that's a technology piece. What about the cultural? You mentioned part of the tie-up was I guess, was concretized through Mitch's perspective, and you felt like sort of shared values in terms of mission. Over time, do you imagine that operationally, culturally, there'll be also some type of overlap there? Because that's a tightrope to walk, isn't it? Like staying independent enables you the freedom and the speed to do what you guys need to do, but the mothership doesn't necessarily get the spillover effect of that, I guess.
Yeah, no, this is a perfectly look. I mean, culture is fundamentally important, as you know. Most M&A deals succeed or not succeed due to that.
Exactly.
Look, the reality is, at least for the near term being 2 years, we've got so much independence, documented as part of the M&A agreements, and that's another reason. One of the reasons why we wanted to do this, we have the ability to leverage the mothership, as you called it, but also be independent. But look, the reality is we are good corporate citizens. I mean, we're part of the Upbound Group. I'm a shareholder. Our team members are our shareholders. So we've already started to integrate a little bit more than I think we needed to from a formal perspective because we want to. And that will lead, whether we like it or not, to somewhat of a cultural shift for a larger company. We get approvals will take a little bit longer. We're following additional policies, etc. But that comes as part of the game. How does it impact our ability to innovate? The honest truth is I don't know, but I do not expect it to change too much because, again, we have very much support from the management of the mothership to do it our way, which in essence is leveraging our own methodology, but also using our culture to impact the larger entities' culture as well. But look, the honest truth is we'll wait and see, but so far so good.
Great. And this might be another answer, a question that has the same answer, but I'm curious also about the impact this would have on you as a leader. Socially driven, speed is super important for you, but now you're doing it within the framework, construct of a publicly traded larger company. How do you imagine, I know it's early to say, but how do you imagine that impacting your ability to lead and guide?
No, I appreciate that. Look, I've made it very clear before we did the deal that entrepreneurs are not necessarily the slowest employees, etc. We want to push.
I would be a terrible employee. I'm just thinking about myself because, yeah.
Yeah. No, I hopefully
move fast and break things, right?
Yeah. No, I mean, look. The thing is, what I was saying is, look, we hopefully, and I don't know how to answer this, but as more effectively than this is, I've worked in public companies before, 2 large public companies. $50, $100 billion public companies at that point in time, including as an investment banker. So I understand the importance of being thoughtful, being publicly aware, and what can or cannot move the stock price. But at the same time, the reason why we chose Upbound as our partner and acquirer was we did believe that we can continue to have the pace to move as fast as we can, maybe a little bit slower, and that's fine because you lose some speed potentially, but you gain this access to this large infrastructure, not to mention users. Look, we might, like I said, might lose some speed to product, but what we're gaining is more people in finance to help, widen that. More people in compliance to be even more thorough, maybe even faster, but more thorough is I would argue is even more important. So we get the infrastructure, we get more users. Does that come at a cost of reducing product speed, including how I feel about it? Potentially, but like I said, it's too early to tell, just to be completely honest. But we are very bullish that overall, when you look at the picture, and even I'm bullish, I expect this to work very effectively. And look, we are shareholders, as I said, and one of the larger shareholders now in the company as an employee, and we are very, very bullish in trying to make this work.
So what are you thinking about over the next 12 months? What is your own post-acquisition game plan?
This is going to sound boring, Zach, but look.
Doing the same reality, but better.
It's same but faster. Even though you're trying to say that. We have a product. We have this product that we're going to be taking out to market. I can't talk too much about it, but let's just say it's a socially it's BNPL, but so much better for this customer base from a social impact perspective, from a cost perspective, and access to credit perspective. That's the only thing I can actually say about that. And instead of us trying to get to, say, 0 customers to 1 million customers in a period of, making this up, 24 months, I don't have the numbers, this will help us get there half the time. So that is something I'm fundamentally excited about. From my own, look, one of the other things is we've got a very strong leadership team here at Brigit as one of the business units of Upbound. It gives them an opportunity to take on even more responsibility, and I'm super excited to give away a little bit more of my responsibility to this amazing leadership team that have been waiting in the wings. I'm not going anywhere. It's like I do this much, maybe I'll do a little bit less, and hopefully maybe a little bit less over a period of time. And they're excited about that as well. And that is, part of my promise as a leader to be able to give them more responsibility. But I'll be very clear, I'm not going anywhere.
Thank you for that. What about the financial health space in general? Do you think there's an impact by the witnessing that, Brigit did have an exit. There is some appetite in the market for that. Where do you see the space sort of maturing to or moving to?
I mean, if there's two big questions. I mean, what I would say is if exits help entrepreneurs think that there's an opportunity to build a socially impactful company and actually have a worthwhile financial exit in building enduring companies, I didn't even think of that. I'm very proud if one entity will come up because they heard about Brigit and the impact that we've had. That will make me honestly super excited. So I hope that's the case, Zach. I think it's definitely not the case, but we don't know to what extent that'll be impacted. So hopefully that's positive. I mean, in terms of would you mind repeating the second part of the question?
Well, I'm kind of curious just where the space evolves to. I mean, so there's that one piece about seeing an exit. Maybe entrepreneurs will be more. It's more fertile ground, I guess, to build in for some folks. But do you see Do you see it as more of a fertile ground, I guess, for new types of companies, new types of products there?
I mean, I don't know if a deal that we've just had or other companies having in terms of exits leads to that's going to be the catalyst to new products. But I think just as people understand the market, as other companies go public or other exits might be happening in the relatively short term, that hopefully gives you continue to evolve. If anything, what's happened is at least where funding's coming from, from the VCs, they understand that you don't always have to solve for a problem they need a solution to. I mean, one of the things when we started up 7 years ago, whatever it was, I was like, hey, I don't really need this product. Yeah, you don't, but that's
not for you, right?
Unfortunately, most of America does, right? When they play it on the product, I go, this looks pretty nifty. Again, I don't need that feature. I don't need that feature. Take it out of you. I think the good news is companies like us and other companies that are in market maybe for large IPOs, that question starts to go away and saying, hey, you can build a profitable, worthwhile exit company for the people who need it the most. And that does not have to be a fancy, no offense, rich VC in New York or Silicon Valley.
I think you put your finger on it. Like, I think that hasn't necessarily been proven out before. Not
as I think about it, I mean, it hasn't to the extent that true fintech companies who are trying to make a social impact have actually exited. I didn't think about that, Zach. That is social fintech impact companies for this segment of the population historically haven't had exits.
What we've seen from this program itself is people launch into the financial health space and either get an acqui-hired or pivot into something to focus more on the rich. I think the question is a good one.
No, I think you asked the question, and like I said, it took me a second to think about using my experience in fintech, including as a former banker. You're right. Historically, obviously B2B exits have been pretty strong in the fintech space. Lots of products built for top 5%, top 10%, very few products historically, now it's obviously changed, built for the median American and below from a social standpoint, a socioeconomic standpoint.
Obviously very early, but do you think that in a way you might be an acquirer in the future of other financial health type companies?
We are absolutely in. Once a banker, always partially a banker.
Yeah, hard to take the hat off. Yeah.
Yeah, even in this company, we looked at acquiring several assets in the past, and we came close. Nothing that actually we ended up pulling the trigger on. But again, as part of a larger entity that with public currency and a willingness to continue to invest in this space, that's why we're here. We are even today actively looking at deals. In fact, I have a deal that I was looking at this weekend.
I guess we'll finish up this call so you can get back to your deal pitches. Thank you, Zuben. It's been great hearing about the Brigit acquisition. I'd love to check in with you, hope maybe later this year to hear how things are going. I can catch up as well.
I will be here, and thank you so much for the opportunity and the very insightful and thought-provoking questions.
Thanks, Zuben. Thanks for joining us on the Tearsheet podcast.
Cheers.